Good morning to Doctor. Today I will explain about the introduction. Top Glove Corporation Berhad was established in 1991 in Shah Alam, Malaysia. It was started with one factory and one production line and became the world's largest rubber glove manufacturer. Top Glove operates manufacturing facility in Malaysia, Thailand, Vietnam, and marketing office in the United States, Germany, Brazil, and China. Top Glove recognized as a one-stop glove sourcing center in the healthcare equipment and service. Next, we move to problem statement. During 2020 until 2021, the COVID-19 pandemic caused a sharp increase in global demand for rubber gloves, leading to a significant growth in top glove revenue and profit. However, during 2022 until 2024, glove demand declined as economies recovers and average selling price normalized, resulting in dropped revenue and earnings. Oversupply of glove increased competition among glove manufacturers and also weaker customer demand become a challenge for top glove. Declining revenue and profitability also limit the company's ability to expand operation and invest in future development. Why we need to understand this issue? Understanding this issue, it is essential to evaluate the overall financial and operational impact of COVID-19 on the Top Glove Corporation Berhad.
Good morning, doctor. My name is Ong Chun Yu, and I will present the financial analysis of Top Group during the COVID-19 period from 2020 to 2021. During this time, the company achieved its peak financial performance. Revenue increased significantly from 7.24 billion to 16.36 billion, representing a growth of 126%. In addition, net profit reached 7.82 billion, while the gross profit margin rose to 67.9%. This exceptional growth was mainly driven by the global shortage of medical gloves and the sharp increase in selling price due to extremely high demand during the pandemic. Although COVID-19 created an extraordinary business opportunity for Top Group, the company successfully maximized its profit, strengthened its position as a leading glove manufacturer, and recorded one of the strongest financial performance in its.
Good day, madam and my fellow friends. My name is Dr. Afri Kumarsani, and today I'm going to present post-pandemic decline and challenges in year 2022 to 2023. After the COVID-19 pandemic, Top Glove performed declined significantly. Revenue dropped to around 2.26 million, and the company recorded a net loss of around 885 million in 2023. Gross profit margin also fell to 2.85%. This was mainly due to oversupply in the glove industry, as many manufacturers increased production during the pandemic. When demand returned to normal, sales decreased and competition became stronger. As a result, glove price dropped and profit margins were heavily affected. This showed that Top Glove performance is highly dependent on the global market demand and external economic conditions.
Good day, madam. I'm Nigadota of Subramaniam, and today I will be presenting the financial analysis of Top Glove Corporation Berhad. For the year 2024, Top Glove shows an improvement in its financial performance, where revenue increased to RM 2.51 billion and net loss was reduced to RM 21 million. In addition, the gross margin also reached to 10.55%, indicating better profitability compared to the previous year. In terms of financial position, the company demonstrates strong liquidity with the current ratio of around 1.9 and a low debt level of approximately 16%. This reflects a healthier financial structure and a stronger ability to meet both short-term and long-term obligations. From this analysis, it is clear that Top Glove is showing a gradual recovery after the post-pandemic downturn. To sustain this growth, the company should focus on diversifying its product range, improving cost efficiency, and expanding its global market share. Overall, Top Glove shows a cycle of growth, decline, and recovery, showing that the company is strong.
Now I will explain the Top Glove response to changes in business environment before, during, and after the COVID-19 pandemic. First, during the COVID-19 pandemic, the demand for medical gloves increased significantly around the world. This happened because hospital healthcare workers and the public need more protective equipment. As a result, Top Glove experienced strong business growth. The company's revenue increased from RM 7.24 billion to RM 16.36 billion, while net profit rose from RM 1.79 billion to 7.82 billion. This strong performance was mainly due to higher selling prices and very strong customer demand. However, the situation changes after the pandemic. As COVID-19 cases was decreased, the demand for gloves starting to weaken. At the same time, many glove manufacturers increased their production capacity, creating excess supply in the market. Because of this, average selling prices or ASP fell significantly. As a result, Top Glove revenue and profitability declined, and the company recorded a net loss in 2023. To respond to this challenge, Top Glove has took several important actions. The company has reduced the production based on current market demand to avoid overproduction. It also controlled operating costs to improve efficiency and reduce unnecessary expenses. In addition, Top Glove focused on improving production efficiency and continue investing in automation technology. These efforts has helped the company manage costs, increase productivity, and remain competitive in a challenging market. In conclusion, Top Glove experienced rapid growth during the COVID-19 and faced difficulties after the pandemic and responded by implementing cost control measures and operational improvement to support its recovery and future growth. That's all from me. Next is Top Glove strategies and recovery. First, in financial management, Top Glove reduced its dependence on debt. The debt ratio decreased from 28.89% in 2020 to about 60% in 2024. The company also maintained strong liquidity to support its daily operation. Next is in inventory management. Top Glove improved its inventory planning and reduced excess stock. As a result, inventory turnover has increased from 5 times in 2023 to 6.64 times in 2024. This shows that the company is managing its inventory more efficiently. And finally, there are some positive recovery signs. The gross profit margin increased from 2.85% in 2023 to 10.50% in 2024. Earning per share or EPS also improved from negative 11.55% to negative 0.81 cent. This shows that the company's financial performance is getting better. In conclusion, the Top Glove financial and inventory strategies have helped the company recover gradually and improve its overall performance.
For the recommendation, I will share 3 points to make Top Glove stronger and more stable for the future. First, for the money, they must keep the debt low, around 16%, and avoid taking a big bank loans. Top Glove also needs to save a part of their profits into a special reserve fund so that they will always have enough cash to stay safe. Second, for the factories, Top Glove need to switch to full automation so that it will lower the worker costs and keep production cheap. They also need to focus more onto other health products like dental dams so they do not rely too much on medical gloves. Finally, for long-term planning, Top Gloves must use digital system to check customer trends. This stops them from making too many gloves that they cannot sell. They should also sign a long-term contract with US hospitals to keep their selling prices steady. And by saving cash using automation and planning well, Top Glove will stay successful. To conclude, the Top Glove's journey from 2020 to 2024 perfectly demonstrated a classic boom and bust cycle. While the pandemic phase brought extraordinary profits, the post-pandemic oversupply and fierce competition hit the company hard. However, the ultimate lifesaver here was their conservative financial management. By utilizing peak profits to keep debt low at 16% and maintaining a strong cover ratio, Top Glove also successfully avoided bankruptcy and built a foundation to bounce back. So, the biggest takeaway from this study is over-reliance on temporary demand is a major sustainability risk, but strict financial disciplines is what guarantees a long-term survival. That's all from us. Thank you.